Hi, I'm here today. I'm speaking to Steve Cummings, who is the founder and the CEO of Rizolve Partners. I am, of course, Bob Cariglia. I'm one of the partners at Rizolve. Steve, how are you doing today?
Bob, I'm great. Looking forward to our discussion once again.
Perfect, perfect. Well, today I want to have a conversation which, sometimes seems obvious, but I'm not sure if we've ever really delved into it. We talk about building value in a client, and I guess a question that I would ask you is when we talk about optimizing value, what exactly do we mean, and what should a potential customer take away from that?
So we do talk about that all the time, Bob. You're absolutely right, and it really is key to our value proposition resolve. So one of the things when we talk about value, one of the things that we like to talk about is the market's view of value. Warren Buffett famously described the market as Mr. Market. And Mr. Market in this context is focused on some things that generally business owners, are aware of, but value investors are totally focused on cash flows of the business. So, what is the prophecy of the future cash flows in the future? What is the business going to generate profit and cash flow wise in the future in the hands of a different owner? So when we talk about value, it's the prophecy of future cash flows. But underpinning that crucially are a few key concepts which the market talks about in terms of risk and discounting future cash flows, all very complex type of terminology. But fundamentally, what they're really looking for is if a business generates future cash flows or is expected to generate future cash flows, how sustainable are those future cash flows going to be in the hands of the new owner? Or how predictable are they going to be in the hands of the new? Are they going to be repeatable, or how are they going to go up and down in size? How predictable are those cash flows? And finally, in terms of value, are those cash flows transferable from one pair of hands, one owner's hands, into another? So it's business value fundamentally, the intrinsic value of the business, what it is fundamentally all about is the prophecy of future cash flows, whether they're sustainable, whether predictable, and can you actually transfer those cash flows into somebody else's hands? So that's when we think about value, when the market thinks about value, that's really what we're looking for. And then when we look at our clients' businesses, what we're really looking for are the indicators, the evidence of whether those things are in place. And if they're not, then we look to strengthen them. So optimizing value is taking one situation and moving it into an improved situation from the point of view of those fundamental indicators of value. So when we do workshops to explain this, another slide that we put up, which I'd like to try and talk about here, is really what is the problem that we're solving on value? Because often there can be differential in the expectations of one owner compared to another owner. And what we do in one slide at our workshops is to showcase company A and company B. And the interesting thing about that slide is company A is exactly the same as company B. And we posed the question to our audience, what do you think the value of those two companies is? And of course, what is the difference in those value? And of course, without other information, they're both valued the same. However, then what we do is we showcase further indicators of value for company A. And typically they represent a company that is old and delinquent and has poor management, and some of the assets are old and worn out and constantly failing. Maybe they don't have good financial records. Maybe they don't have any planning, forward planning, and so on. And then we compare it to company B, and we give other information to our audience about company B. And company B is typically a best in class company with great systems, great people, trained people. Um, you know, Many are, the financials are accurate. They've got great best in class strategic planning processes, and so on and so forth. So what we try to do is show two companies that on the face of it should have the same value, but when you look under the covers at the value drivers within the company, they're two very different companies. And what we are trying to showcase here is that there is a range of value that the market ascribes to similar companies. And so when we talk about optimizing value for a particular situation, what we're talking about is understanding what that situation is, where in the range of value that company is, and trying to ascribe improvements to that company to move it through the range of value. So, and often the improvement potential for a company boils down to the risk preference of the owner. How fast is he prepared to go? How much investment is he prepared to make at the back end of his career in order to improve the value? So there's a number of variables that get ascribed to a particular situation to move a company through to what is possible, in other words, optimize the value for a particular situation. And we are experts at doing that, as you know, Bob. And then, so then the other thing I'd just like to describe to our listeners is the concept of the range of value. And again, at our workshops, we put up on the screen a data set over 10 years. And the 10 years reflects the full cycle of the economy, from good to bad to good again. And we showcase the range of value for similar size companies, two data sets, 25 to 50 million and 50 to $75 million of total economic value. And we showcase to them the range of value for each of those size of companies and the dispersion in value that those companies attract. And it is really harping back to the setup of those companies when they come to market. And so range of value is very important. Understanding where you are in the range of value is very important, because it leads you to what is possible based on your risk preference as a business owner. And so optimizing value is all about understanding where you are, where the low-hanging fruit is from the point of view of improvement, and being able to put a plan together to improve that value over a time frame. And that's what we do. That's what we do. So, look, I've talked a lot here, so I'm going to put you on the spot a little bit for our listeners, because you're our sales acceleration expert. And one of the key value drivers that we always look to is sales organization and process, because it represents one of the elements of good foundation for growth. And then the absence of some of the key indicators of value that we like to see, in the absence of that, growth can be at best it can be choppy, it can be up and down, and it is fraught with unintended consequences. So the question I want to ask you to extract the information for our listeners is, what would be the fundamental things that you would look at from a sales organization and process perspective? What would be the fundamental things that you would look at for a company to have in place before they really meaningfully start to invest in the business and try and drive growth?
Mm-hmm. So first of all, just I like your explanation of optimizing value, because obviously in sales we're always trained to see things through the eyes of a buyer, and to present whatever it is that we're selling in a way that a buyer can understand it. And if I'm buying a company, and I look at, I love that example of those two companies. I'm very familiar with that slide. One company is old and tired, one company is dynamic, it's moving, they're making investments, they're moving and shaking. And of course, as a buyer, which one am I going to be more interested in? Even though today on paper, side by side, they kind of look alike, if one is making moves to put all the right pieces in place for the future so that you can see that you can continue to get that value out of that company into the future, well, obviously I'm going to take a look, and I'm going to ascribe a higher value to that. And I also know, to your question now, I understand that when we do look at companies, the whole the sales process and so on is often fundamental to driving value in a company, because obviously, when you're buying a company, you want to take a look at, does this company have the capacity to grow? So we really look at four things. There are really four fundamental things that need to be in place for a company that you would look at as being of higher value. Number one, from a sales perspective, do they have a sales strategy? And that sales strategy has to be very tied to the overall corporate strategy. If the sales organization is not moving with the same strategy as the organization, then you've got a disconnect. And that disconnect is going to end up in sub-optimization of revenue at the very least, and somewhat confusion and a really mixed message out in the field in terms of the company's trying to do this, but the sales organization is moving in a whole different sales strategy. So the sales strategy really has to be tied to that overall corporate strategy. And that's why, of course, we so often look at the strategic plan and then tie the sales plan and the sales strategy to that strategic plan. Number two is process. There's that old saying that if you don't know where you're going, any road will get you there. And the sales process is really your roadmap for both implementing that strategy that we just talked about, but also achieving the results that you need to have as part of your corporate objectives. And the sales process, a lot of people will say, well, sales processes are unique to every industry. They are. The terminology is certainly, unique, and the process or the product or the services are somewhat unique. But the process behind it is really somewhat the same industry over industry. And you've got to make sure that you've got the right process in place to take a client from being a prospect all the way to taking them to a closed won opportunity. And there's about 6 to 8 stages that your process should outline. And of course, we could do a whole podcast on those, and probably will sometime in the future. But you want to make sure that you have a process in place that is well defined, that is documented and very much well understood by your sales team. And that process really echoes exactly what a customer is going through as they make their decision to take on your service or to buy your product. Your process needs to absolutely mirror their buying process, is really what it comes down to. So process is critically important, that it's well documented, well understood, and well applied. And of course, there's all kinds of great tools out there now in terms of CRMs and reporting tools and KPI tools that really give us the capability to do a robust process that just didn't exist even 10 years ago. So the next one is great. You've got a strategy, you've got a process. Do you have the organization to drive that process home? Often called, do you have the right bums in the right seat? And that's critical, because you need to have the right people who can communicate your value proposition to your clients, who can follow that process all the way through, who have the right ability to make sure that they're listening to their clients and that they've got the right experience and the right training to follow through on making sure that you get a successful sale. So organization is critically important, that you've got the right people in the right place. And one of the areas that we look when we're talking about value in the sales area, we very often see that people have been promoted or moved into sales positions that really are the wrong fit. And that's not going to build value in a company. That in fact is a detractor from value. You want to make sure you've got the right people in the right place. They're well trained, they're well compensated, and that will definitely add to the value of your company. Critical in that is your sales, the revenue is distributed across your sales organization. You don't have one superstar who's doing 95% of the sales, because that's risky. If that individual were to leave, or if that individual were to retire or something, all of a sudden, a lot of the value in the company will go away because that individual is now gone. So you want to make sure you've got diversification across your sales team. And then finally, you need to have a management structure that is pulling this all together, that is taking the company strategy, is applying the process, is managing these resources. No matter how good these resources are, these sales, or your sales organization are, you need to have a management structure that keeps everybody moving in the right direction. And that incorporates weekly meetings, ride-alongs, so that you truly understand how your organization is performing, and you're seeing them in action with clients, that you're understanding what the training needs are, that you're understanding what potentially new technologies are required to support your sales team. But that all happens with your management structure. So when I look at a company and I see all of those pieces in place, those 4 pieces in place, and then of course all the sub things that belong to those pieces, when I see that all those pieces are in place and they're actively managed, that's when I know we've got a valuable company here. And I know that at Rizolve, if we don't see those pieces, then that gives us the opportunity to work with clients to build those pieces to, as you said earlier, optimize the value of the company, at least within the sales organization.
Yeah, so just adding on to that, when we talk about optimizing, if we've got the foundation for growth, particularly in the sales process, if we have human resources well managed so that the promises that are made by sales are capable of being fulfilled, in other words, the capacity of the company to deliver on those promises is there. If you have, a strong finance function that is able to make sure that sufficient finances are in place to fund the growth, if operationally, there's enough warehouse space, there's enough packing machines to pack the goods before in a timely manner, and so on. If so, and the leadership is in place to put the plans together which are achievable with good financing, and so if we see all of those things in place, we feel like the foundation for growth is in place to then optimize the value of the company. Means delivering on those promises, delivering on those plans, those making sure that the plans are accurate and predictable, good prediction of the outcome into the future. If all those things are in place, then the foundation for growth is in place, and the probability of a successful growth plan being executed is a lot higher.
Yeah.
And if you can deliver on those plans and showcase to investors that management can deliver on a growth plan, then they're willing to pay higher premiums for that type of an economic engine.
Yeah.
Well, that's what we talk about with our clients, Bob, is not?
Yeah, Steve, that's a really, really important point. Sales growth is not done in a vacuum. Years ago, I was involved with a company, and I remember going to one of it was in the automotive industry. It was the largest industry function put on annually, and we had a booth, and we killed it. We were selling services that were getting rolled out. We were the right product at the right time. The buyers that came to our booth loved what we were offering. We sold more at that particular trade show than I probably have in any other trade show. The challenge was we got so excited about the front end, the growth side, putting all that together, we didn't have the capacity to fulfill the orders that we had taken. And that is a bit of a train wreck because all of a sudden, promises that you made in terms of when you could deliver on your services aren't kept. Customers who are all very excited about getting this new service get a bit disgruntled because they're really eager to put it into place, and now it's taking longer. The sales team that was involved in making the sale gets discouraged because now they're starting to see some cancellations and so on because of the inability to actually deliver. And then ultimately it puts huge pressure on your delivery organization because now they're under pressure to deliver. And sometimes in the act of trying to catch up or trying to fulfill orders before you are ready to do it, quality suffers. One of those unintended consequences you talked about. And of course, that's a detractor of value. So, you can't just, address one leg of the stool, so to speak. You've got to make sure that you're looking at all aspects of not only the sales side and the marketing side, but the delivery side, the finance side, the reporting side, so that, you are able to follow through on the growth that, you're able to, create. But an investor will look at that and say, okay, now I get it, because this is a company that, the value is there. Without all three of those, all of the legs of the stool being firmly on the ground, you will not get to where you want to get to.
Well, and just adding to that, Bob, when we're taking that situation that you just talked about, where promises were made, which evidently meant that the predictions for future growth from management and finance and so on were not met, that is a detractor to value, evidence of a detractor. But let me just highlight some of the other things that you just said. In terms of customer satisfaction, one of the customer satisfaction, well satisfied customers, happy customers who give high ratings and are loyal and come back and purchase time and time again. High customer satisfaction is highly correlated to the value of the business. So if promises are made that aren't delivered upon, customer sat's going to go down, and that is going to take the value of the business down as well. The fact that you have variability of earnings because you made promises and they didn't come through, that is a detractor to value, or certainly an investor's perspective of it would be somewhat dimmed by the lack of harmony in the different elements to the business. And then employee culture. If you said that in that situation, employees are put under stress to deliver under highly time pressured conditions. That doesn't lend itself to a harmonious company with people that are delighted to come into work every day. So all of these things, very fine margins around optimizing value. But when things go right and are and the assets are working well in harmony, when the cogs of the engine are syncing perfectly and working well, that portrays good business value towards the upper end of the range of value. When there is a disharmony in the way things work, that brings the value of the company down and more towards the lower end of the range of value. So all these things really are very integrated, and And we're looking for, at Rizolve, we're looking for evidence of how that economic engine is working together and it's how it's set up.
Well, you bring up a really good point. As one of the clients that we've been working with for a while now, has done an amazing job. It's not a huge company, but this particular company has been able to, number one, diversify their customer base, which wasn't the case, just a few years ago. They were largely, tied to one customer who delivered a large part of their revenue. But they've been able to diversify their customer base by providing great service. And that great service has resulted in high customer satisfaction. And within the clients that they've got, and these are world-class blue chip clients, they are providing them with more business. And it's interesting, when you see this all play out, internally within the company, the culture of the company is very positive because they've got the confidence, because they know they deliver great service, because they're hearing the feedback from these clients and they're seeing it in increasing revenue from existing clients and other clients who are hearing about this company. So it really feeds upon itself. And if I'm an investor looking at this particular company, that is going to spell that just speaks volumes in terms of the value of the company. And again, it's because they deliver great service. It's because they get great customer satisfaction. It's because they have a great culture. It's because they've got an employee team that takes responsibility and accountability for delivering great service. It's a valuable company, and it's only going to continue to grow.
Yeah. And you're absolutely right. It does become somewhat self-perpetuating with well-organized teams and well-organized businesses for sure. But one of the key elements to that, as the company matures, is to have the planning process more and more sophisticated, which gives better visibility through to the stakeholders of the company. And one of those stakeholders could be outside investors. The other stakeholders could be management. Other stakeholders are the employees of the company, even reaching out to the stakeholders such as suppliers. The more that good communication can be exercised across that stakeholder base, and the communication is all about the plans of the company and what it's setting out to do, the more good communication happens, the more people get motivated and get in sync with those plans. So you're absolutely right. There's an order to value creation, which is almost like when executed well, a rising spiral.
Yeah. Yeah.
And we see it a lot with our clients. As you know, we preach having town halls with the employee group
Mm-hmm.
to inform them as to what the plans of management are. Be constantly surprised at how that doesn't go on, but when it does happen, it is such a delight to see how people react from that communication.
Yeah. Well, that brings up an interesting point as well, is, especially in the area that we focus, the mid-market, companies, we're not talking about huge organizations of thousands of people. And there's a lot of, even a well-run company, as when we take a look at it, we're always able to find there's a number of areas where they could, create some additional improvements. Something as simple as having regular town hall meetings. But these things all take time, right? And it takes time to put these processes in place, and it takes time to, make sure that this is being done on a regular basis. I think time is also a critical aspect here. We talk about this a lot in this podcast and in our websites and so on, and in our workshops. This doesn't happen in weeks or months. This happens, you should give this process 12 to 36 months to make sure that you're really putting the pieces in place to optimize the value, because it's not something you can just turn a key and there it is. It's something that you've got to create. You've got to, especially when it comes to things like culture in a company, all important factors in improving the value of the company, but you've got to give it some time. So that's certainly something that we espouse to our clients, every chance we get.
Well, just in concluding, Bob, Rizolve is here to help private business owners to optimize the value of their business, and we've given them some examples today about how we go about that. We want to make sure that those businesses have a firm foundation for growth in the future. And certainly one of the elements to that, certainly from Rizolve's perspective, is having a firm, one of the key value drivers to that is having a well-organized sales organization and process. And so that's something that, we work on for sure. Yeah, so hopefully we've given our listeners a purview on what we mean when we talk about optimizing value of the business.
Yeah. No, I think this has been a great conversation, and certainly, there's a lot of elements, and we'll talk about them further in future podcasts. But I think this has been a critical aspect of just letting our viewers, letting our listeners know, what it means to optimize the value of a company. So, Steve, thanks so much. Great conversation. Look forward to having many more of these. And of course, anybody who's interested in getting more information, you can go to our website at www.rizolve.ca. Again, that's rizolve.ca, and find out more. And we're always open for a discussion just to chat about your particular situation. So, Steve, thanks so much. Look forward to talking to you again soon.